Well, it's now the turn of the biggie, India's largest cement maker, UltraTech Cement, to come out with its results. Remember, expectations now are even higher. Going into this particular earnings season, expectations were quite high from the entire cement pack, given that it was expected to see some amount of demand revival. Number one, from the pent-up demand due to the lockdown, and also construction activity typically tends to come to a standstill as far as the monsoon season is concerned. Now, ACC has come out with a stellar set of results. UltraTech will now be forced to follow suit, and expectations are quite high. You're talking about the revenues on a year-on-year basis, seen down almost 4.5%. While if you're talking about the volume growth on a year-on-year basis, expected to be around 2 to 4% again on the higher side. Sequentially, when you're talking about the volume expectations, it's expected to see a very, very sharp recovery from the pandemic-induced lockdown. A 30 to 35% volume recovery is what the street is anticipating. Now, coming to the EBITDA has seen higher by almost 7% on a year-on-year basis, and margins are seen higher by close to 200 to 220 basis points. Coming down to the profitability, expect profitability to surge higher by almost 56% on a year-on-year basis. And what are the key factors to keep an eye out for? Number one, the first thing to watch out for would be the kind of recovery that the company has seen post the lockdown. Remember, pent-up demand is something that is expected to aid volumes. Realizations are expected to decline almost 2% on a sequential basis, while if you're talking about the volume growth of again 2.5% on a year-on-year basis, and a 30 to 35% recovery sequentially. Cost trends is something that analysts are quite wary of. Now remember, UltraTech Cement actually has operations all across India, so any part of India actually sees positive, and if the other part is seen quite subdued, the effects are nullified, and generally UltraTech Cement comes out with a stable set of numbers. So sequential cost trends would be quite mixed. The important thing to watch out for would be the impact of the rise in input cost prices. Remember, diesel prices, petcoke prices, all of them are on an upswing, and this is something that analysts have been saying for almost 2 quarters now that could impact the margins. However, when you're talking about the margins, given the fact that typically you tend to see the impact of petcoke price hikes a little later, a little delayed impact, you probably start seeing it from the next quarter. So diesel petcoke prices are on an upswing, so that could impact the margins. ACC actually managed to deliver a 1% year-on-year volume growth and a little over 30% sequential volume growth. So UltraTech Cement expectations are similar. In fact, volume growth expectations are slightly higher, and that will be one thing that the street would be anticipating, along with the management commentary on demand revival.